And officially, good morning, traders. Happy Sunday. Welcome to the Market Watch Group Sunday Market Insights. My name is Scott. I'll be your host. As always, remember that our service is for educational and illustrative purposes only, not intended to be a recommendation to buy or sell any security or financial product. We are not brokers. We're not advisors. We are just a group of like-minded traders, speculators, if you will. Some may call us a best friends club. I wouldn't argue with that. I've heard that description. I would say it fits. That's what we are. Pursuing market success. Agenda, market posture. I feel, if nothing else, and I would love to hear, like, if anyone is like, hey, you know what, I feel like I got too aggressive, and if you're, I feel like that's not the case. I base this on our conversations as people tell me, oh, there's Graylin, let me get her. And I base it on our conversations where I just kind of say, hey, what's everyone doing? And it seems like in the last 4 to 5 weeks, risk levels have been pretty tight. No one in here has been like, oh, I'm throwing trades around, but all of a sudden getting, right? So I feel like no one's over trading, and this has been a market that's very susceptible to over trading. I feel like there's been a willingness to go to both sides, bullish or bearish. I feel like people are cutting losses, taking gains sooner in a more responsive fashion based on this more volatile market that we have, like the adjustments from a bullish market to this market, shifting even what sectors we're focusing on as we wait to see what information comes next. Maybe I'm just trying to pat us on the back without warrant, but does that seem right? Is anyone how is everybody feeling? No one's happy that we're in a weird market that's done what it has, but at the same time, how are you surviving? Anyway, happy Sunday, Graylin. Good to see you as always. Market posture, economic calendar, sector identification. We're not going to search, but we are going to say, if there's going to be a recovery, or where are we seeing glimmers of hope? 10%. You hear it. You heard me talk about it way back when. I'm like, let's figure out where 10% is, so we have like an idea of that watermark. And then all of a sudden, the market's like, oh, 10%, 10%. Why is that important? Well, it's a technical definition. It's a technical definition of a correction, a bear market. If someone says I'm bearish, that's not the same as a bear market. A bear market is a technical definition, which means we are 20% down from highs. Right now, we're down 10. So if this were to do another round of this, another 10%, then we'd be like, oh, we're now in a bear market. We're now in a bear market. Now, right now, we're just in a correction. Could be a deep correction, 13, 15%. It could, right? Or whatever. I'm just saying, if someone says, I'm bearish, that just means that their posture on the market is oriented to the downside. We never said that either. So number one, we were never in a bear market. Number two, we never claimed bearishness. Number three, what were we willing to do? We said, we are willing to take a bearish trade. That doesn't mean I'm bearish. I don't have to be bearish to be willing to take a bearish trade. Why? Because I'm a speculator. We already said that. No, because, what are we trading? We're trading the denigration of the market. We're trading the decreased momentum of our market posture. We're trading the desire that when we moved from a 4-5 range down into the 0-1 range, that's neutral. That's not bullish. It's not bearish. We're not bearish. What are we? Well, we have negative momentum in a neutral market. So we're like, yeah, am I willing to take bearish trades to get balance? Yes. So when I think about correlating market posture to trading, That's the thought process, right? That's what we're looking for. Sandy, I love your comment. She says, weird time at the moment, but things will work out. Okay. We will still build, obviously, a early week opportunity list. That list will be both bullish and bearish still. But there's going to be some subtle things going on that we have to be careful for. And that is, if there was bullishness, how much? Well, there's not going to be a lot of Vs. We might see a few Vs, but not many. But there's going to be some that had like, ooh, look at that. And some that was like, not much. The not muches are still going to be what we would consider to be bear flag territory, where we're thinking, hey, if this thing all of a sudden ramps up to the downside again, I need to have something ready to go that I'm going to put on and trade bearishly. Versus, if it has a minor pullback this week, we call it a sneaky reversal. There hasn't been like a huge there hasn't been a huge surge representative of buying pressure that we would be like, oh man, look at the buyers doing that smash and grab. Remember, at the end of the day, everything we are doing is orienting around supply and demand. Now, this weird time with more volatility, what are we saying? It opens as a possibility shorter term trading, day trading, right? And you know, some people, I call, when you're down around 3 minutes, that's scalping. 5 minutes is kind of right on the bubble of scalping to day trading. I prefer looking at like 30-minute to 1 hour, where I'm going to be momentum trading more than where it might go overnight. So you're just kind of, you're being fluid to the market. The market, if you have the ability, right? If you have, you might not have that. If you work during the day with no access to the market, you're limited to daily charts. It is what it is. You got to figure that out. But if you have the ability, then you might move to different time frames. So that's another thing that we haven't talked about this for so long. The last time we got a score that we have right now where we're at was October of 23, to just give you a sense. But along the way, I'll say, hey, look, if we ever get back into a time when the VIX is a little higher, our score is in the middle, we're doing less swing trading, we're doing a little piece bullish, a little piece bearish, what else comes into play? A day trades or even a potential momentum trade, kind of a hybrid. I might even put one out. I might even designate it as such. Now, if that happens, those are going to be much more Johnny on the spot. Like, you can automate them pretty well. You have a much better ability to automate the trade, putting in automatic stops and target orders and things like that. So, good to see you, Stephen. But we will still have the opportunity list. We'll talk about the types of trades we should be considering. What are the markers we're looking for that would make us either A, a little bit more bullish, or B, accelerating into more bearish. And then just like that, especially if you're new, we just finished section 1, personal information, who's driving the ship, what are we moving on to? Section 2, market posture. Market posture, and how does the posture just sort of create some system controls for you that you're not having to, like, every trade, like, how many positions, what do I do here? Where's my stop? Where's my target? System controls, meaning we just have a different thought process that orients us around our trades to align with market conditions. Do we take profits sooner or later? When we were 5, 6, 7, we would let things go. Let's see what it does. Let's take a third of the trade off, and then let's see what it does, right? If it's wrong, we would be like, well, it's wrong, but let's just leave it anyways and see what happens, because we're super bullish. So it's like, yeah, I was super unwilling to take a loss in that market.
Is that the market now where like, oh, let's just kind of see what? No, don't see what happens. Take your loss and get the hell out of there. It's different now. That's kind of why I feel like it's so important to emphasize market context, because most places just sort of teach you to trade and move you on, and it's like, wait a second, are you going to do it that way all the time, just the same way? I just don't feel like that's the case. That's not how the market works. Right? That's like saying, I'm going to teach my kid how to drive on the freeway and then send him off driving. You're like, that's one condition where you're just going fast all the time and there's not a lot of turns, or right? Like, it's like, I don't know. Anyways, okay, let's go. Let's get into the agenda. We'll get to this. Interesting week this week. Let's get to the posture. That sounds exciting. If you're new, let me bring something over. The market is a living thing. It is. And it's pushing a lawnmower. And you and me are blades of grass. That's why we're here, fellow blades of grass. Right now, we're all a little bit leery, like, let's duck. Let's keep our heads down right now. I think we all agree. Heads down, right? But back before Christmas, it was sunny. We're all having a party. Everyone's dancing. It's good. Now it's like, woo, let's hold hands. Let's hunker down. Lawnmower's right over top of us. It's feeling a bit dicey. Okay. Here's where we are. Let's insert these. Let's go to the 23rd. Oh, can you guys believe it is the end of Q1 almost? That's insane. We're at a 0.25. I was going to show something to the newbies. Everyone's a newbie. I'm a newbie. We're all newbies here. But I do want to show you a couple of things. Don't forget to come into your group downloads here under alerts. Actually, I should take alerts out. Alerts to the top now. But here we have all of these good things for you, like your trading plan outline. And then here is a sample plan, so that you can be like, hey, what does it look like when it's done? And then you have the market posture log. That is for you to keep your own spreadsheet. You have record keeping, stock trading log, and option trading log. You have an article about the top 10 trading mistakes. And then, did anybody notice that these are updated? The group watch list is updated as of our watch list last week. And the historical market posture is updated as of last week. You're welcome. Now I'm patting myself on the back after it was like 3 months lagged. I know. Okay, let's go. Kamisat, thank you for noticing. Long-term score. Again, it's pretty stable. We're not expecting our long-term score to like have a precipitous drop or climb. And that's very intentional. We want it to be a little bit more stable. Oh, son of a gun. I think I have to update. Wait, did I just lose all of them? No, let's see. Disconnected. Oh, come on. Come on. I had just connected. Okay, give me a second. I gotta grab this. Sunday mornings, it's like I'll log in at 8 a.m. and then I'll come back at 9 a.m. when we start. And is it going? There it is. Okay. And then it like goes into its reset. All right. Okay, that's updating. Let's just pause. Let's go back to what we were doing here. been busy. There's a lot in there. Yeah, a lot of good graphics in there that I was playing with. Powell downplays forecasts. Fed's preferred inflation. Yeah, let's go look at the economic calendar for a second while my charts install updates. I might have to stop it and start it again. It's always weird on Sundays. There's not much on Monday. There's just a couple of minor Standard & Poor's reports that nobody pays attention to. Tuesday, consumer confidence expected to drop. Wednesday, durable goods expected to climb but still decline. So improve from -3.2, but still be is that a minus? No, that's a positive. So I guess we're going to drop to a minus. So durable goods expected to drop. GDP is just a revisionary number. No one's really paying attention to that. I don't think there's much other than, we're going to be paying right now, the market's going to be, see, it's going so slow. Close automatically. Right now, with we've already seen a little bit of, come on, Thinkorswim, you're better than this. Retry. Okay, here's a quick side question again, as I'm distracted by my login issues. Since Schwab has taken over from Ameritrade, who has gone into the graveyard of brokers past, since Schwab has taken over, you Thinkorswimmers, do you find Thinkorswim to be the same, better and more consistent, or worse and less consistent? Sandy says the same. Bob Rowland says worse, less consistent. I kind of feel the same. I kind of feel like the updates, it's clunky on logins more frequently, where I'm like, what is going on with this thing on the updates? I don't know if I should stop the update and start it back up again, because it's like, but at the same time, back in the day, it went through this process every time, every day, because we would update weekly. When I worked for Thinkorswim way back when, and we would have an update. We're like, hey, let's make it do this. Great, boom. It was constant. Now I don't know how much maintenance they put on it, but anyways, a lot of maintenance. Kami says, so I should be patient. It's sitting here installing updates even still, and I'm like, what do I do with that? Okay, let's go. We'll keep going here. The big one is weekends are slow with maintenance. Yeah, it is increased slow. The biggest Friday has income spending PCE. PCE is expected to stay flat. It's expected to stay flat year over year. Core PCE is expected to stay flat, and core PCE year over year is expected to go up 0.1%. So it is, let me just make sure it's still, oh man, I feel disabled by this. Oh, there we go. There we go. We're back in business. Boom. Okay. Okay. We're in business. What were we saying? The market is way more sensitive to jobless claims right now due to everything else. So if all of a sudden we see it jump to 250, we're not going to panic. But will the market? Probably. Right? Probably. So let me get a chart. Time for charts. Let's detach you. Make you bigger. Make you smaller. Drop you down. And you down. And you down. Okay. Okay. SPY. Woo. Let's get to the weekly. And I'm going to take this down to 7 for now. Whoop. Okay. All right. Back in business. Sorry for that delay. That's my fault. I thought I had it ready to go. But anyways, last things last. We're watching the core PCE to see if any of these things tick higher. That's not going to bode well, especially if it's like an unexpectedly big tick. That's not till Friday. So it's going to be pretty light until then. Let's just look at the Fed. We have 45 days. We just had a meeting. The next one is May 7th. Expectations are not much. Right? Not much. What is this? 6-1-ish against. For May, I'm still a July guy, but the market is shifting. Here you can see the market shifts to June. The Fed has still said they think 2 rate cuts, but I think that it really could be like July, skip 1, October, skip 1. Or July, skip, hit it in December, depending on what else is going on. We know as a group how historically often the market tends to overemphasize the likelihood. As a group, we've seen that over and over and over again, where it's like, oh, we're going to get rate. Oh, not yet. They're kicking it down the road. Press says CPI on April 10th will be an important one. I agree. So, we'll actually get 2 of these that we're getting here. We'll get PCE now, and then we'll get it again at the end of April. And then we'll get, right? So is tomorrow, is the one this week going to be hugely critical? I mean, again, if it's unexpectedly high, where everyone's like, oh, there it is. There's the tariff impact. Then I think you'll see... then I think you'll see the market a little less patient. And that's the kind of thing that might move us into, or at least towards, not to, but towards bear territory. All right, let's go posture. Enough delay. I have to go fast, and I can't just say it. I have to mean it. Okay, so what happened here? The last time... Here, last week we scored it for breaking down. We said it wouldn't again. Now we're kind of looking at this. This I believe was a 0.75 back when. Maybe it's a little bit more, even if it can hold in that trend. But right now it's got to hold this. But so far it has. So 0.75 to me is fine. We've definitely given some back, but overall, the trend here you can see is still intact. So I'm going to leave mine at 0.75. Short-term score. And weigh in with your scores. But if you put your score, make sure that you actually designate what score you're saying. I might go fast, and I might be like, wait, did you say this one? Did you mean this one? So put LT equals if you want to weigh in. I'd love to hear what everyone else is scoring. I'm a 0.75. Long term. Short term. Short term, rather. Let's move this down to 6 months. I need drawing tools real quickly. Now, 1, 2, 3, 4, 5. This was the last week. So again, it's we did. We got a little higher than we were, but is that enough to like raise the score? No. But am I going to lower the score? No. Neither. So I'm going to leave mine at a 0.25. And right now, if anything, it looks like it could be kind of moving into something like this, maybe, right? Where it's like, okay, we do want to acknowledge, just this is not scoring, so I'm leaving both my long-term and short-term the same. We do want to acknowledge, we're like, oh, it's only one buy day, only one buy day, only one buy day. And then we had 2 -1 and then another, and it's like there was definitely a different level of buying here. Was it like a smash and grab? No. Why do we say that? Because A, there's no volume. There was no increase in volume. And B, although there was on Friday, we'll get to that in a second. Friday's not really in this movement, though. That's what's interesting, first of all. But I would say that that's enough, and that it's if this pulls back and makes us think that a higher low might come through here, and we don't know yet. You can kind of see right now we're just moving into the overbought territory. Because the buyers got it all the way back up by the end of the day, it pinched, but it never turned. So, it could come down a little further and then turn. I mean, there's we don't know. But what I do know is this is my last low here. And if this thing comes up, whoops, and then it does like a pullback like this, and then it turns, that's it. That's enough. Right? So if we have like a doji and then we come down, I am going to do I am going to do the paths picture here in a second. Let's say something like that. I think that would end up looking like this. And we would say, oh, wait a second. Is that the market's like found its new higher low? Okay. I'm staying the same, 0.25. Let's go to volume. The 4 paths. Here's volume. We have a new volume. Put it over there like that. Okay. Here's going to be sort of a trick question. Am I going to put a B, a T, or an S? B, T, S. Give me your thoughts before we get into it. Now, let me move this. I got 3 answers in 3 different letters. Awesome. Awesome. Okay, I look at the left side of this chart where we know things are a little stale, and I have 2 remnant days. These aren't even that big of days, just when you see them over here. So I am discounting you. You're out. So I'm only going to assess what we have here and whatever is new. I see B, S, T, T, B, T. Now, if we were voting, the policy of the group is first to 3, which is T's. And that's actually what I'm going to say as well. I'm going to give it a tie. Now, this is the close of the previous day. When we say we're up today, we're down today, we're orienting to yesterday's close, not today's open. If we oriented to today's open, then the buyers would be winning. But when you look at where the buyers were at the end, they actually finished above the previous day's open, but below the previous day's close. Now, if we had finished maybe at least 0.5% below the open, so maybe somewhere down in here, that's where it would have to be for me to say the sellers won. Somewhere down in this range where it actually was down from the prior day. It was down, it was barely down, but it was down. But I'm going to say flat. That's for me. The issue I have is you comparing a volume day with a non-volume day. No, the only way for you to register a volume day is to compare today's close with yesterday's close, regardless of what yesterday's volume was. Does that make sense? I'm not comparing this day to that day, meaning this is an above average, that's an above. The only reference I have always for this day comes from this day. We orient to the previous day's close. We do it with the market, right? So when we say the market's up from the open or up from yesterday's close? Up from yesterday's close. That's the orientation. Does that make sense? We don't orient from the open of the day, that gap down. The sellers opened the market. The buyers closed the market. Overall, who won the day? Nobody. It was a tie. Sort of like a doji, but because of the gap, it didn't end up working that way. So I'm not comparing a volume day to a non-volume day. The only way that I can gain what this close means is by orienting to the previous day's close. That's it, always. So one to the other, it was slightly down, very slightly down. So who wins? Tie. Does that make sense? By not comparing it to the previous day, how are you deciding if it's up or down? If you're only looking at the candle, you're not really getting all the information that you need. That candle is a bullish candle in a vacuum, but we don't live in a vacuum. When you put this into market context, it gapped down and then it ran up and then it finished slightly lower than it started or slightly lower than it finished the day before. Otherwise, would I consider it a selling day? So again, for me to have a selling day, it would at least have to be below the prior day's low and maybe even a little bit more, right? So like something like that. And then that's at least that far down, right? That's how much movement. Otherwise, why are we giving it to the sellers? If they only pushed it this far, are we like, oh, the sellers are so strong? Nah, we're not giving it to them. Perfect, press. I'm glad to hear that. This was more helpful. So I am going to give it a tie. Now, look, I'm not going to say if you're like, Scott, I don't know if I agree. I kind of feel like if it's, it was down from here to here, like Kami said, sellers, which was great because it is more sellers. 565 down to 560, but it was only 560. It was only $1. If it was more than that, if it was like at least $2.5, $3 maybe, I'd be like, yeah, okay, I see that. Good conversation. But look what you're saying. Listen to what you're saying. You're saying, I want to put my bias in. So the fact that you said it, I would say don't. But it's your market posture. Why can't I pick one of you up and move you over here? There you go. There's the T. Now I need to move this guy back. Get back over here. Okay, so now what do we have? Sell, sell, sell. 1, 2, 3, 4, 5, 6. Well, those sellers dropped off quite a bit. 6 sellers. 1, 2, 3, 6, 3, 2 ties. 6, 3, and 2. It's definitely more oriented to the sellers too. Definitely more oriented, but I'm going to actually say there's not a huge gap. I'm going to say this is a minus 0.5. If I were going to look at this, that's my score. Overall, now this is where we are. This is where we started. This is the orientation of our line. Yeah, minus 0.5 feels right. But we're also noticing that we've got some stability developing coming out of this, at least, right? Okay. Let me go see. My volume was actually a minus 0.75, so now I am going to improve that organically. So that improved not because the buyers started pushing, but because the sellers stopped pushing, right? So either one of those mechanisms can contribute in that regard. Okay, let's keep going. I feel like I'm actually going pretty fast today here. It's pretty impressive, I think. You might not agree. If you don't agree, don't tell me. You know I don't really want to know. Major market. Whoa, what are we seeing on the major market? It got nasty quickly. We're at a negative now. Why are we at a negative now? Well, you can see even here, the Dow is at the top, right? The Dow is at the top, Russell at the bottom. NASDAQ has had a big fall. It's now in 3rd place. Yeah, that doesn't look great. That looks negative. We go to 133. I don't need whatever you're selling down there. We go down to 133. And the NASDAQ is still fighting to hold on there. So it's like, okay, well, let's see. Russell is down. Doesn't really help or support one way or the other, but certainly this looks more negative as well. I gotta say, I'm kind of leaning more towards, now we have 2 time frames. We have the 200 and we have the 66 showing quite a bit of weakness for these guys, and the Dow in a leading position. I feel like I'm going to actually drop this to a minus 0.5. Give me your thoughts on that. It's not looking good. Minus 0.75 for Steven. Okay, Steven's already there as well, so fair enough. Yeah, this doesn't look great. We don't love this. Let's go to 22. You can see more of the same. The Dow's on the top. The NASDAQ's down on the bottom. Honestly, minus 0.75 is that's pretty reasonable. I'm thinking about it. Maybe if it stays down here for another week or two, I'll probably join you there. Yeah, it's not looking good. The appetite for risk has severely diminished. Okay. It's not like we're like, what just happened? We're like, we've been seeing it the whole time, but we're sort of like always thinking, are the bulls going to come make a run? Are we going to get something? But like the more it doesn't, the more we stop thinking that. Okay. Any questions? Let me know. Let's move on to sectors. I thought we might actually pop up a little bit here, but it looks like we're going to maybe not. Are we going to go negative? That's the question. Some of you maybe already did. Some of you maybe already did. Who's on top? Oh, financials trying to hold up. This is only on the long term though. Communication services. So we have two trying to hold up, and then you already have discretionary way down here, utilities coming, industrials, right? Technology's just like way down here already. Let's move down to 133. We still have comm services, we still have financials, and then we have energy, and then discretionary is falling off and tech's falling off. It's really, we had a lot of saving grace in the sector rotation analysis, but it's just not there now. Now we have energy in first at this level, healthcare second, utilities. The only remnant of a growth is financials. It's like we were moving towards this. I feel like this is going to kick me negative. And then you look down here and it's just like, what's down here? You've got technology at the bottom, discretionary at the bottom, communication services, like everything's just dragging. I'm going negative, minus 0.25. Ooh, and now we're at 0. Real-time score. Still at a 0.25, Steven said. Okay. Yeah, I don't know. For me, this being the 66 day, you've got like 3 above. You've got 1 just sort of like, oh, look at me trying. You're not doing well. Let's go to 22 just because press likes when I go to the 22. And since he's here, I want to make sure I keep him coming back. What do we know here? Energy. Any hint? What are we looking for on the 22? There's no tiebreaker. No one's like, oh, I'm conflicted. I don't know which way. No, this is like what's coming down the pike. Nothing good. I can tell you that. Nothing good. Yeah, maybe if we saw something pop like, oh, look at that. Look at tech. Boom. People want it. Look at this. Nope, we're not seeing it anywhere. You got one little teeny hint of some momentum on communication services. Yeah, it just doesn't look good. Okay. Ooh, let's get to the VIX. Let's see where we finish up. Then we'll get to the watch list. I need 2 cards. I need bulls and bears again. Yeah, honestly, with us kind of settling into this 0, if you're an options trader, I'm definitely looking at butterflies this week. So, great opportunity to learn if you've never done them before with some paper trading. Let's go back to our charts. Let's go 6 months. If you're long term, there could be some bargains. Agreed. Yeah, some nice flags, some nice pullbacks on the trends. Just go to your weekly charts, run through them, and you'll be like, oh, man, there's some nice-looking setups in here if I can catch these. If that is your perspective, you still want to wait for the long term. Make sure it's done being cheap, right? Make sure it's done getting cheaper. Let's go VIX. Okay. 1, 2, 3, 4, 5. So this is where we were. So we were here and now we're here. The problem is, even if I took this level, which I think maybe we could take this level here, a little under 18, assuming this went up, pulled back, and we're gonna assume, and you can see it had just a little blip right there. Otherwise, that's our last low, and that's hard to work analysis off of. So that's how I'm gonna draw this. If you see, so if we turn around and go like this and start to see selling, this is a higher low. Right now, it's a higher low, right? So
We had a big old surge up, and then we pulled back down and got a lot of it back, but this would be a higher low. Now, if we get this, am I thinking there's a chance we're going to run back up towards 28? Yeah, that's definitely my concern. But I'm also thinking we could do something like that, where it's like, that's the subtle shift we would be looking for. If there's a mark that we're looking for where we say, hey, it feels like we're maybe stabilizing. Feels like we're maybe stabilizing, and that we could maybe see a buyer's bounce. This little lower high subtle move in the VIX, that's the kind of thing we would look for to be like, yeah, let's take it. Let's get a few on, a few more. Right now we have a little bit. So far, we're like, hey, if this thing is going to V, we need to be a part of it. I'm going to put one trade on that's showing some strength. It's been tough. There's been a couple that haven't gone well. That's the market. But if I see something like this, now I have a little bit of comfort food with me, right? A little like, oh, hey, that feels like home. That feels good, normal. So let's definitely be paying attention to this subtle thing. Could go either way still. There's nothing here that's like, oh, I definitely think the buyers, or I definitely think that. I'm like, oof, I don't know yet, but let's see what happens. Questions, comments, concerns? What's my score going to be? Unchanged. Unchanged. Nothing happened one way or the other. Didn't really do anything substantial. We went from 21.66 to 19. We dropped 2 points over the course of the week. That's not enough for me to be like, oh yeah, the institutions are really getting confident. Nope. So I'm unchanged. I'm going to leave mine as still at a 0.25. My final score is a 0. I dropped 1/4 of a point. So again, looking to hopefully, we dropped 3/4 of a point here, and then a 1.5, and then 1 1/4, and then 1, and now a 1/4. First sign of stability. First sign of stability. We like that. We like to see that. That's helpful. Okay, perfect. Let's go to the watch list. First time, it's been a long time. We dipped to a minus 0.25 in October 23. October 23. Nice bull run after that, though, right? Okay, let me get to the watch list. I got to get some things organized. Get to the top. Let's get you here. Apple. Interesting. But if this fails, I'm still bearish on Apple. That's not enough for me yet. If it gets higher, then I'll take it off the list. If it gets up into like this 222 to 225 range, then I'll probably drop it down. AbbVie, I still have AbbVie on the bulls, but I closed. I did not like this selling pressure here. It never broke this low. If anyone held on to it, and they're like, you know what, I'm going to hold till it breaks. If it doesn't break, I'm in. I get that. So, yeah. Okay. AEE. I'm still going to have that on my bull side. Amazon is nothing for me. Baba is still bullish for me. Bank of America. Oh. Yeah. I don't know. Bank of America. What do you guys think? Is that enough? I feel like actually I don't think I would go bearish. I think the buyers did enough here to not go against that. I think it could be a little bit, but I wouldn't go bullish until I see it. I'm going to leave that off now, actually. BX, I think BX could still have some bear in it. Caterpillar, nothing. Sienna, I'm still a little bearish on Sienna, actually. Although I looked at the options and I didn't love them. I should probably take it off if that's true. CLS, I was bearish on. It rolled on the pinch, but I stopped out. And this is one where once I'm wrong, I'm wrong. At this point, I see a different picture now. Right? Now I think, ooh, wait a second. This thing could be trying to do one of these as it bottoms out. Like Press said, there's value hunters out there who are like, hey, this thing just got to a nice little value spot where they're going to be buyers. So that's the other thing is when we see those bottoms put in, we have to be careful not to then be like pot committed that we're going to like, oh, I think it's going to go. I think it's going to go. No, I thought it was. If we had gotten a big sell-off, it probably would have. It didn't. Okay, no harm, no foul. Well, some harm, a little foul. CME, super bullish. Looking for a trade bullishly on this one this week, for sure. Cisco, I got to tell you, I still feel like that's a little bit on the bear side. Delta as well. Although, actually, I'm going to leave Delta off. Again, sometimes it feels so subtle where you're like, is that enough? Duke Energy, definitely bullish. Fastenal, I'm going to leave empty. I'm actually going to say I'm still bearish on Fiserv. Flex, nothing. Too bullish, right? Again, you know, it feels like, oh, you're like, it's still so far under. But no, look how much the buyers did. If this thing comes down here like this, we think it's ready to go the other way again. So I'm not bearish, and I'm not getting bearish. I was willing to if things start to pick up that to the downside, our posture will and we'll go that way. I don't know about Fox. I kind of feel like Fox is on my bear side. I loved it for so long and then it just fell apart. GE Vernova, I think that could be a reversal sign. Again, just get a sense. If the buyers did this much, don't bet against them. If they only did that much, if they did half that and it's rolling over, then we're like, yeah, they're still dropping. Like here, they only did half that. That's not enough. But look at the size of this one. Much bigger, right? Sometimes we want indicators to do the work, but all you got to do is draw the lines and be like, hey, am I convinced that the buyers did enough here that I'm not going to bet against them thinking it's going to trend down? Gilead. I was bullish on that, and it's now holding the 50, but all right. I'm going to say maybe, and I'm going to keep it on the bulls. Gold. Gold is bullish. People still like gold right now, that's for sure. Is silver doing well too? Let's see how SLV looks. Yup, indeed. Okay. Fair enough. Where was I? Gold. Google, nothing. Goldman Sachs. I think I would. I don't know. It did some. All right, I'm going to leave it. Off the list. Hood, Robin Hood. Maybe I'm gonna. I don't know. They got just enough of a bounce. Financials did. Nothing there. IBIT, I'm still bearish on. IBM, ICE. ICE is nice and bullish. KMB. I'm going to take one of these. Which one is it going to be? Kroger. Kroger's on my list. MasterCard. I'm going to put that on my bear. Not enough. Only got a few days, this one, right? Didn't get up in this area. Stole down here. Meta. Meta's just kind of in a grind. Morgan Stanley, no. Microsoft, still down. Netflix, no. Nye. Ooh, come on, Nye. I held on. I'm going to see if it goes. Still have a little bit of gain in there. I took some off. Took a small gain. Still have some. NVIDIA, I'm actually putting on my bull list. Do you see it? Consolidation. Buyers. Pullback. Bam. Bam. If we get that. Yeah. Same thing I think with Palantir. Let's just go see. Palantir is already kind of moving. I'm going to put Palantir on there. You guys know I love PLTR. PM, let's wait and see. Qs, no. Roblox. Roblox is all of a sudden, right? Bam. Don't bet against it anymore. For me, that's all it takes. Reddit, still down, but not tradable. Rocket Lab, still down. I would say that's neither. RTX, bullish, setting up. More bulls than bears this time. So maybe a shift. SE, I would still keep on my bull list. SPY. Not seeing much. Tesla's down. Maybe getting a little bit of a bump. TSM is down. Twilio still feels bearish to me. Visa. Visa kind of looks like it's hooking right now. Walmart doesn't look great, but I'm not going to bet against it defensively. Okay, that's the list. What do we have here? I've got 1, 2, 3, 4, 5, 6, 7, 8, 9 on the bear. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 on the bull. That seems like a pretty reasonable distribution. Market posture is straight 0. Looking maybe if we have a little bit of a surge and it stalls, that would maybe have me put on a butterfly, which is a neutral trade. I'm flexible. I'm not looking for a lot of risk. Can you post these? Bob Rowland, the answer is yes, I will and do. So where will they be posted? If you get the email, check your spam. If you're not, I mean, everyone should be getting the emails, right? The email synopsis, it's in there. Or if you go into, let me show you this beautiful website of ours. Recordings and summaries. And if you go into these recordings and summaries where right? So this is where I'll post the wrap, and then there's notes. If you go into these notes and you say see more, you can see stocks on the radar. And this is consumer bullish, bearish, financials bullish, bearish, and right. So this gives you like, what do we have? Where do we have it? What? I put a lot of time in these commentaries. So it's there for you. So after we're done here, I'll post the Sunday here in the recordings and the summaries, and it's there, or it's in your email all week. You can go find them all week, the same list. So if you go back here to Monday and you click on Monday and you scroll down, there it is, right? Just these little updates. And if you want to watch the video, it's there. If you want to see Jerome Powell, that handsome devil. Okay, great. I'm glad that works.
Lastly. Oh, good. I'm glad you guys know that's there. I know there's a lot in there, right? If you're new, don't forget the courses, man. There's like 40 plus hours of content to just learn about options or trading. I mean, I know that you're just like mesmerized by these cool little graphics I had designed. Anyways, thanks, Kami. Good to see you. Last thing we're doing here, I'll let you all go. I know everyone wants to go enjoy their Sundays. I do too. Trading plan outline. We're moving on to section 2. Write down what you do, write down what it does for you, write down the implications. Remember, there is a fully fleshed out plan for your viewing pleasure. All you have to do is download it, and you have that to use as a guide. All right, 5 minutes. That was not bad, especially for some login delays. It's good to see everybody. I'll see you in the morning tomorrow, 9:15 a.m. Eastern. Have a great rest of your day. As always, happy trading.
Recording